Good evening. Welcome to the end of day review for today. And today is Thursday, October 31st. It's the last trading day of October. And it's also a Halloween day. So happy Halloween to those who celebrate Halloween and do trick or treat. All right, today is a follow through day. Basically, the short setup is formation, and yesterday it the confirmation, and today is really make a move, a huge down move. We're kind of surprised with the huge down move. Yeah, we always surprised because we have some kind of bias. We thought that okay, it will not be move down that much. That is one of the bias that for novice trader. I mean, as a human, we always have some kind of bias, right? Because from yesterday we thought, oh, okay, it already sell off, so it's not gonna sell as much today, especially in the pre-market. It really sell off. So in the regular trading hour, it maybe it retrace, and that's the buyer right there. And I think they call it recently. They have a word for that. We can take a look. What is it called? Recency. Yeah, what's recency bias right there? Favorite event over recent event. It's a memory to the more recent. Maybe, yeah. Basically, the idea that somehow in our mind we thinking that yesterday it already sell off, so today it will be sell off, but it's not huge. That's an idea right there. We'll look at the chart later, but today we are in week 44, and today we have a huge earning come out. That's the reason why the last 30 minutes is very fluctuate. Exactly like yesterday. Today is Amazon, Apple, earning release. I think yesterday is Microsoft something, and Meta, which is Facebook's right there. Yeah, we did trade the last 30 minutes yesterday, and we did see that phenomenal. And today we trade also, and we see the same phenomenal happen. So the lesson we learned later, don't trade a lot 30 minutes in the earning season, earning week, which is October, especially the last 2 weeks of October. Don't trade on on the last 30 minutes or last hour or so. Don't trade. October, July, April, and January. So those 4 months right there, that's the earning season right there. Avoid trading the last hour, last 30 minutes. Yeah, we should put a note on that. Yeah, we did put the note in our journal or our playbook, so keep that in mind. Do not trade in the last 30 minutes or last hour, last 30 minutes in the earning season, because the earning, when it come out, it really and the algo pick up, it really fluctuates. So we are in week 44, and 8 more weeks we finish this trading year 2024 right now. All right, so today we have a PCA data is come out at 8:30 right there, and the market's moving down. It give it a setup to short them. And then tomorrow we have a non-farm payroll. It coming. And then after that, we will have a CBI data gonna be released. Wow, CBI right there, November 13. Wow, November 13 right there, CBI data. Yep. And then we have a Fed meeting for October, right? So we're closing October today, and tomorrow we start a new one. But it's still the new one, but it's the not a new week yet. It's the last week, last day of the week. Yeah, and then we're looking for the 13th. It's CPI, and then the first meeting will be 6 and 7. All right. Wow. So basically, the CPI come out. It gives us the Fed meeting come before the CPI. Okay. So yes. Wow. 2 more weeks. Wait that? No, next week. Wow. We just learned it. Yeah, the bias we have bias based. That is the thought process that we observe ourselves. We see that we say, oh, market will not move down that much, right? It's moved down yesterday, so down that much. Here's the daily. Let's close this so we will less distractions. All right, so here's the daily time frame right here. We're going to spend a little bit time right here to see where the liquidity, draw on liquidity, how the liquidity going to build up, right? How it's going to build up, and how to set up formation, and what lead into a huge show off today. I'll start from here. You keep in mind, you remember this level right here. It used to be, where is that? You remember that this week start on October 7, it used to be going down, but it flipped, and it formed this kind of candle. It can call a hammer, right? They call hammer, or because it have a very long bottom wick right there. Yeah, go back to our cheat sheet right here. So that candle is look right here, right? Look like a hammer, but actually the body a little bit bigger. It's not perfect match, but it's right there. They call hammer, right? Hammer. It's up close called hammer, but it's down close is called hanging man, right? Yeah, basically a hammer. Basically, the hammer tells us that it tests from above, right? So it's gonna break. It tests from above, it's gonna break. But if flip, then it tells us the next 2 or 3 move it set up before it come down. Exactly 1, 2, 3, boom, come down right there. We see that everywhere. I mean, you see it high time frame right here on the weekly, but on the daily you see right there, this guy, that the setup right there, the hammer right there. So look for the next candle. In this case, is the candle follow in the next candle. In this case, the next candle, boom, it go right down right away. I mean, you can see that everywhere. Maybe in this case, it's not there, right? But you can see that is everywhere when in the retracement. looking for the next leg down. The next leg down, you're gonna see that everywhere. Yeah, right here it's not there. I mean, the two possibly, right? So this guy is supposed to be what? It's moving now after this formation, but it flipped. So the two possibility we have to watch how it behave the next day can give us a good indicator that which direction it's gonna go. It's gonna be expansion or it's gonna be reverse. Yeah, so right here you see that that's the next leg down right there. Boom. Yeah, we see that a lot. All right, so now go back to here. You remember right here we see the flip, and you see the level right there, it flipped. Then we know that get ready to short when we see that it tests from below. You see the last week, it really tests from below the level at the big break. So it's a type 1 reversal right there. Break, test from above and reverse. I think we did take a screenshot, today and analyze that. So here's our take screenshot at before the market open at 8:50. So here's our right up right there. So we see that it's a full breakout on the weekly level at 58.30, right? It's a reversal type 1 right there. Break, test from above, this one, and then this one gonna reverse. And reverse, we anticipate that it can, eventually you see it gonna take out the low of this candle. But we thought that, we thought that basically it moved faster than we anticipate. That's an idea right there. Fast than we anticipate right there. We thought that maybe it moved close right here, and tomorrow, the last day, it's gonna hit the target on a weekly candle. However, that is our bias right there, and we caught surprise with a huge down move, 68.25. So 68.25. Yes, so basically it's gonna come down here. Come down here on the weekly close. It's gonna take this sell side weight right there. Okay, so look here. How do we see this morning when we anticipate right here? So basically we saw, wow, you see that in the pre-markets, it already, on the daily, we see that it already hit this target, this candle range right there. So 51.01 right there, the target is right there. It already hit that. So we thought that, wow, the target already hit, so it's not gonna be, moving down any further. That is our thought process right there, and that's the reason why we don't engage short on at 8:30. And that is the huge lesson we learned. It's about the bias, and we have to internalize why we thought the way we thought, why we thought that target right here is already hit, so it will not move further. All right, now we reverse engineer, we see that bias is, or that physics, the idea we come is basically is incorrect, and that reason why it prevent us from take the short trade today at 8:30. And another factor is that yesterday we saw a short setup in the pre-market, and we did take the short, and it come out beautifully. And then plus those two factors prevent us to take another short trade. Yeah, that's how we internalize, our thought process the whole day. Why we missed the trade. We try to find out, why we did not take the trade. Two things, right? We take a good short trade, yes, in the pre-market today, and it hit our target. It's more than it's a target. That's the first factor. So we thought, okay, we just short, and we hit the market, we hit the target, then maybe it will not never go down again. Now looking for opportunity to go long. That is one of flaw in our process right there. All right, here's the short setup we trade with the short trade we took in the overnight for today. Right, we took the trade around, we check screenshot right here, is around 22:36, which is like 10:36 p.m. yesterday. We see the setup. Basically, we look in the high time frame right here. You see that? So basically, it's gonna break down this level because that is the weekly level, 58.30 right there, and we see that right here, 58.30 right there. You see this is already test above one and twice, so it's gonna break this level. Okay, it's gonna break that level, but we don't know how much further down it's gonna break. So we just go with our ratio. Go default. Basically, we want to reach 1R and get 3R, so that we aim at 3R with 3R, right? Yeah, 3R, which is about 10 point right there, 30 and 10 point right there, which is around 3R right there. So at 50.28, and we play the trade, and then we go sleep, and we wake up beautiful. It hit the target. You see that? 20. So we hit the target right here. It will let it when we have another. So from 20, it go down all the way to almost 80 right there. So we have another 20 point to go right there. And we look back, we say, wow, why we set the target too low. We should have set the target at 51.08 right here. The reason why we set the target is low, you know why? Because we did not anticipate that the market sell off in the overnight market so strong. The sell off so intensified, so it hit the target right away in the pre-market at 58.01 right there. We thought that, when we look right here, right here, you see that? It hit that level. We thought maybe it go down 10 point and then it reversed back something. That's the reason why we set the target only. You see right here, we thought that it may go down around here, and it wait for the regular markets open at 9:30. It's gonna come down and hit this target. That's our top process right there. We didn't anticipate that the huge sell-off in the overnight and pre-market in the morning. Actually, overnight market. But look at that overnight market. It's huge. It's sell-off. huge. And that is one of the reasons leading to our buyers this morning. We thought, wow, it sell off too hard right here. So okay, let watch the tape real quick and you can see. Yeah, so here's we turn on the recording at 8:44 right there, which is right after the 9:30 8:30 data release right there. If you look carefully, you see the source setup right there. Test from above, you see right there, and it's right above the London range right there. Just let's increase the speed real quick. Okay, so just pause right here. Just before this happening. Okay, so right here we see that when we open the charts, we see that it's a down move right here. It's an expansion move right there. Expansion move, you see that? The London also expansion. And then right after London, it make a retracement. So our thought process that, all right, in order for it to go down, maybe it need to hit the London high, and then it can retracement from here or reversal from here. That's our thought process. But the huge lesson learned for today that it may not need to hit the London high, because at the 8:30 when the GDP data, the PCA data release. So the huge lesson we learned right here that if we thought that it hit this level at 5801, it hit the target, so it's gonna be retrace from here. It's not gonna make it's not gonna make any move down. That is our theory right there. However, now look, we see that at 8:30 it gives us a short setup right there. So basically, see the short setup right there, break, test from above, and then reverse. Take above twice, so reverse is gonna be huge. Let's watch real quick. You see that's the fast forward. You see, yeah, you see that. Here's the 8 at 9. You see at 9. Here, what is he at 9? Okay, so right here you see the huge up right there, and that is the London low level. Little low level right there, and then it's what is it kind of retrace right here. Yes, and you see that at one point it retrace. At one point it retrace all the way here, and in our mind, we thought that it will be fall into this scenario on Tuesday right here. We thought that Judah swing at 9:30 and reverse. That is our thought process right there. That's the reason why we kind of hesitant to go in and go short at 930 right there. But you see the difference? Now we see different that in the after London pre-market in the New York, this is a expansion down, right? But for today, a retracement up. Yes, that's the difference right there. So in order for the 930 Euro swing expansion down reverse, then this one has to be moved up. This one has to be this one has to be moved down like this. It cannot be like the move up like that. Yes. So in order for it to be a reverse at 930, then at this move right here, the move in the pre-markets, the New York, it have to be another expansion down, and then the 930 will what? Will do a huge expansion and then reverse. That is the logic right there. Right? It have to be like this. And in order that's the London have to be what? Yes, the London have to be a expansion up right there, or yeah, it's expansion up right there. But for today, you see the opposite happen. The London is the expansion down, and then the pre-market is a retracement, and then boom, is expansion down, neck leg down. Yeah, now we look back, we see very clear that it's gonna be a short setup. In order for the long setup, this one have to be moved up, and this one have the pre-markets have to be moved down, and then the rip from 930 Euro swing and boom and reverse. But today it's the opposite happen. That means the short setup gonna come. Similar to here, you see that? You see that? Similar like Wednesday, you see that? The Euro swing, boom, and then reverse. The pre-markets have to be down. Right after London, the pre-markets have to be down move. And then it make a last manipulation move or expansion to the outside and reverse. See that? Has to be down. Yes, that is the huge lesson we learn. And that's why we mix the huge move at 930. Yeah, just recap that right there. So right here is a short setup. Why? Because already open, gap down right there, and the Asia you see it's a down move, and also London is a down move right there, expansion. The whole move right here is an expansion to the downside, and then right here it's just a retracement, and then the next leg down gonna happen. Why the next leg down? Well, in order to make a retracement here or reversal here, this move has to be the opposite. This guy has to be moved up, and this guy, the pre-market has to be moved down, and then the 930 make the Euro swing, rate order, sell side liquidity, and reverse. It have to be that way. Okay, then another question is that why it not go up here high to rate this London? It not necessary because at the 930 it's 8:30 when the data release. It's that when it need to rate the buy side, but it couldn't have. It doesn't have any buy side up here, so it just make the retracement and a next expansion down move. So that's the only logic right there. Yeah. And you see right that, boom. And right here, we see that it tests from below this level. And right here, we're thinking about going and short, but we see that wick right here, we know that it's still try to go down, but at the same time, in our mind, we thought, oh, wow, it looked likely pretty much like, you see the wick right there? We thought that the wick is tell us that it may reverse, but that's the mistake. The wick have to break down that level in order for it to be reversed. But look at right here, it did not break down. You see, it tests from above. You see that? The 930 had to break that level, but right here it not break it. That's from above. So then it's gonna be the huge down move. That's the subtle right there. That's the subtle detail that we miss. We make the signal from the market right there. So basically, we have to distinguish between the noise, which is a four signal, and the real signal, the noise and the signal right there. And the rest is history. You see that? Boom! Wow! It go down deep. And right here, we thought it's gonna reverse, but you know, it did not. I think we did to go long right here. We paid the huge price right there. Yeah. Also, we thought reverse right there also. So we run the lesson that don't touch long, because the heel down move right here is gonna make another expansion. You're gonna make another expansion, so don't go long. And it did make another expansion right there. Say retracement and expansion. You want to go, then wait for the last hour. And keep in mind, even though the last hour, because the trading, the earnings, it very fluctuate for the last hour. So basically, if we miss this move, to avoid completely, right there. All right, before we go to the trade we took, we want to show something real quick from the Euro swing on Wednesday and Tuesday, the difference between them. Yeah, so here the Euro swing ICT, but it's a special case. Special case in the sense that it's only one single swing exactly at 9:30 and then it reversed. And we see that the reverse on Wednesday is different than the reverse on the Euro swing on Tuesday. You see on Wednesday, you see the Euro swing right there at 9:30. It's very low resistance liquidity run right there. That means it moves very smooth. That's the idea. This term is we borrow from ICT. That's his term right there. He coined that term right there. Basically, low resistance liquidity run. We have to tweak our term to say that low resistance liquidity run. Basically, it move very smooth. You don't see a huge, weak at all. It's very boom and very solid right there. That's an idea. It's very smooth. Well, if that the case, then you will see that it make two leg move very easily, very low resistance right there. Then get ready for the reversal. That is the signal right there, right? The low resistance liquidity run, it's gonna be reversal in the PM, PM or around lunch time right there. And you see the reversal type 1 is formed exactly at 11:45 right there, and you see the level right there, the 48.81 is exactly the open at 8.18 right there. So that to give us two clue to looking for reversal at the open of 18 right there, and the time also give it a level reference and a time reference when the reversal can happen. So basically for the Wednesday, the Judah swing at 9:30 is and the reversal right here is very smooth. It's a low resistance liquidity run. But look, on the Tuesday we have the opposite happen. Well, look on Tuesday right here. On Tuesday we have a high resistance liquidity run. You have a Judah swing at 9:30 like Wednesday, but look at the 9:30 swing. It's very resistant, right? It did not a big Dow low candle at all. It get a pushback. That's very resistant right there. And look at all the candle, very weak right there, right? It get a lot of weak candle right there. And the wick is called resistance right there, back and forth. If you watch in real time, you can see it's lots of back and forth. That tells us what? That give us a signal that the reversal will not happen on the PM. It will not recession. It will hold. That exactly happened on Tuesday. On Wednesday, the opposite story happened. Yeah, that's the point we try to make right there. All right, look at the trade we took today. Let's look at the last hour. We do the experiment on the last hour. Okay, so here you see that we go long right here at this level. Well, after we try so many times around here, it's not a clear setup. That's the reason why it's very risky, very dangerous. Because we anticipate, okay, right here you see that it's gonna make retracement and another leg down, and then it's gonna be reversed from here, or just a retracement. In this case, it's too late for them to reverse. Keep in mind that it had to be a reverse, a retracement, because we have to put the time constraint in here. We're a little bit naive. We aim too high, you know. It do not have a time. If it still have another hour, then that's at the aim right there. But we a little bit naive. We aim too high. We should aim at this level. You see that? We did aim at that level, then we good. You see the heel retracement right here, and we got a little bit critical. You see, we move the target. It will leave right there. It hit our target right away. Yeah, if we put it there, we had target. We got 10,000 right there. So that's heel lesson for us right there, right? After the huge down move, it's gonna make a retracement and make a second leg down. There's no doubt about that. And from there, it's gonna make a retracement or reversal from here. But there's no way for it to make a reversal because the time constraint. That's make it only make a retracement right here. Then you have to aim around this area. Don't aim too high. Yeah, if you aim too high, you're not gonna get it, and you give back all your gain. And you see the pullback right here is huge right there. Actually, see that? If we, yeah, huge right there. So basically, right here, you see that? From the gain, and then we have to give back a whole lot right here. All right, we made never an exit from trade from here, but you see this move is also complete. It's what break it, test from above and reverse. So this move complete. So if we miss the long right here, you can go long right here and rip the profits right here also. To look right here, okay. So right here we have a decision to make. Let's say that when it retraces back here, we scare, we get out of the trade, right? Then are we gonna go in and go long again, or we go short right here because it's test from below, we're gonna break it? That's what we thought also. But right here you can go long. You know why? because the short setup already complete. Break the level test from below, and then it's close. It break, reverse, close below that level, and this guy should not hit this level. If this guy hit this level, then that means that it's gonna reverse. It's gonna break. That's the whole idea. There's no reason for it to come back to that level. It already break, test from above, and reverse of this one should not go back. And if it go back, then it's gonna go up. See, if it go up, then I just am at this high because it's too late in the game. It don't have enough time to go much higher, and especially in earning, earning weekend. You see that if we am at this high, boom, you're good to go. Yeah, so that's the mistake. Boom, you see that? It come down and it take out right away. You see that? It take it out. And look, the humor because the fluctuates come from the earning right there. Yep. So that's the huge lesson we learned right there. All right. I think we covered a very detailed area, but look at the charts again. You see how beautiful the setup for the daily. I mean, you look at the weekly and the daily. It gives us. We want to cover something real quick. Okay, so you see right there the whole thing right here. This is a Wednesday, right? I think we did have a write-up. By the way, we didn't find our write-ups, but you see right there. You see that how it moves the markets, how it build up the liquidity, and then it run the liquidity. You see that this is the Wednesday last week. You see that huge down move, but then it pull back. It tells us that it's gonna break this level. It will break this level. And how it do that? It build up the liquidity right here. You see how it build up right there, and on Wednesday, and then Thursday it store right there, and then Friday it rate the high of this candle or the buy side liquidity, and then you see this week, the Monday and the Tuesday is set up for a huge move for today, and on Wednesday is just the first day, and today is the follow through day right there. That's another concept. Right after the first move, tell us that it's gonna make a second leg down. You see that? First leg down and then retracement, second leg down. So this today, the Thursday is the follow through day, which is follow the Wednesday. Last week, if we play the follow through day on Monday, on Thursday, it will not work. It did not follow through. The reason why it did not fall through, but you know why? Because it did not have enough liquidity. That's the reason why you have to come back up, and you see that it tested level twice on last Wednesday and last Thursday. So when it break on this Thursday, it's the last Thursday it test this level from above, and this Thursday it break it. It break real hard right there because too many liquidity that it built for last couple of days. I think from last Wednesday, 1, 2, 3, 4, 5, 6, 6 day liquidity, and all taking off by today. That's how liquidity you pull right there. You see that? How beautiful! Wow, what a setup! And you look on a weekly. You see that is the type 1 reversal right there. Yeah, this is the setup we're talking about right there. Type 1 reversal. And you see right there. And remember this candle, the signal right there. Anyway, we thank you for your time and interest. We are always grateful for this opportunity. We do what we love, then success is coming our way. Day by day, little by little, we do getting better and better. Thank you and have a great night, and see you tomorrow. Bye for now.